Hi traders, welcome to my video on the Cumulative Delta Indicator. In this video, I'm going to show you how you can use this indicator to help you capture moves like this one for around 400 pips. Okay, so you can see the Cumulative Delta Indicator displayed here below my chart. Okay, so the indicator in essence will show you whether the buyers or sellers are in control of the market. It gets the information by calculating the difference between buyers or sellers. Okay, so this information we can use to help us decide whether we are going to buy or sell. Okay, in essence, we're just going to look to sell when the market is in a downtrend or buy when the market is in a bullish trend. Okay, so we're going to trade with the trend. As you can see here, we're clearly in a downtrend. This is the MT4 trading platform that I'm using. I've got the cumulative delta indicator installed, which I found online for free. Okay, we can see that the market reached a resistance point here. We had this sort of this wedge pattern forming here, or this ascending channel, if you like, a triple top formation as well, because the resistance was tested 1, 2, 3 times. Okay, so price moved away, started to make these lower highs here. We could expect this move to the downside, especially after we had this breakthrough, this breakout here, around here. You see this breakout of this support line. Support then acts as resistance here. So this is a strong signal that is holding up well. And then we have these lower highs here. Price starts to move away. In this instance, I would have taken a trade here. Again, another wedge pattern, but this breakout here, if I just zoom in for you, can see there's a big breakout candle there. This level of support once breached. In fact, this level of support goes all the way back here. So it's a strong level. Okay, consolidation in this zone. Then we have a clear breakout to the downside here. This is a good breakout trade in line with the prevailing trend. Okay, aggressive entry would have been here. Okay, you can see this more perhaps shorter term support there. It is breached, does become resistance. Okay. So perhaps aggressive traders would have taken this breakout, or you could have traded on the pullback. You've got a nice inverted hammer there as well. Okay, but had we have just waited for the breakout first here, just to avoid a fake out, waited for another pullback, and then we could have traded this breakout. If we just zoom out, we can see this trade would have been good for 360 odd pips and counting. I would have placed my stop loss just above the high here, so relatively tight between 15 to 20 pips, which is good considering this is a 1 hour chart time frame. Then we could have used a trailing stop, so just move the stop loss above the recent highs all the way down. Okay, this way we can lock in as much profit as possible. So if and when price does turn around, say our last trailing stop was here, we get taken out here, we've maximized the move as much as possible. If we hadn't have exited manually once we see the market start to make these higher lows around here as well. Okay, as I said, this is a 1 hour chart time frame. I just prefer the longer term chart time frames as they contain more price data. Therefore, I find signals tend to be more reliable. That applies when using technical indicators, price action analysis, candlestick patterns, support, resistance, trend lines, so on and so forth. Okay, so where does the cumulative delta indicator come into play? And to be honest with you, I prefer just a strategy like I mentioned there, price action trading. But you can use the cumulative delta to do exactly the same thing, really. In essence, when it's showing lots of red bars, it means that the market is moving down. Just as when it shows loads of green bars, it means that the market is moving up. Okay, when you sort of see it flat and choppy like this, it means that the market may be slowing down and perhaps starting to range or consolidate. Okay, so what we want to do is we want to look for a scenario like this where you can see a clear trend direction and just look to trade in the direction of the trend. One slight criticism I have is this is something that we can do just by looking at the chart anyway. We don't necessarily need this indicator. Okay, although I understand some traders might like the visual appeal. For me, shows a very similar thing to what the chart is showing itself, but you can use it for determining trend direction, as I said, and then just trading with the trend. So we can see clearly, you know, we're in a downtrend. Okay, and you can mark your support levels on there as well. Okay, and just wait for a breakout. Okay, and then just trade the breakout. Again, here, you can draw your support level. Open to interpretation. You know, some traders may draw it like this. Okay, see that breakout there, then support becomes resistance. So trade in the breakout short around here somewhere. Okay, whereas others may just wait slightly longer and look to enter in a more favorable position up here. Okay. I do think if you just draw your support levels or resistance levels on the charts, you can achieve a similar, if not better, result. For example, here, okay, we could have traded the breakout there, which is slightly better and obviously more traditional. You know, you can always do your horizontal support level like that. Tested, 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 breakout. Okay, so you could have traded the breakout there, or you could have waited for the pullback where you see the support then becomes resistance. Okay, that's just confirming its strength, and then you've still got half, at least looks like around half of this move. Another entry point, but ideally we want to get in early. Okay, so as I said, this breakout opportunity here, you know, you could have drawn it on the cumulative delta indicator, or you could have just drawn it yourself manually there. Okay, you can see a nice M chart formation, breakout to the downside, support becomes resistance, and you're in the trend at a very favorable price point. Okay, and perhaps this entry is a bit more conservative compared to this is quite an aggressive entry. Still, you know, this is even more aggressive, but even here is quite aggressive just because we haven't quite broken out of this zone yet. If you wanted to wait for a breakout like this, then a pullback, you know, you can do that. However, if we take the more aggressive entry here and we have a 20 pip stop loss, you know, maybe 15 pips, maybe 20 pips, it depends on where the recent high or low is. Even if we take a couple of losses just trying to get the breakout into a new trend correct, we can just make back those losses and a lot more if we use good money management and you know, let trades run. If you 360 pips profit potential here, I mean, even if we had 3 losses for 20 pips and we were down 60 pips, if we catch that trade eventually, then we're up 300 pips overall, minus broker fees, spreads, commissions, etc. Okay, if you do exit early, you know, you get excited, price drops around here, 3 to 1 risk to reward ratio, you take the profit. You can always re-enter. Okay, so you could have re-entered on that breakout there. This one here, okay. Another one here. There'll be opportunities throughout to re-enter. Just bear in mind you don't want to end up selling too low or buying too high, okay? The more the longer you leave it to re-enter, the higher your chance of buying at the low, or sorry, selling at the lower, buying at the high are. I mean, still a trade here, even here, but then, you know, you're selling at the low. Ideally, you want to get in around here or here as early as possible. There's another one there, clear breakout, nice M pattern formation, breakout to the downside. If we go to the cumulative delta indicator again, it picked out something very similar there. Okay, almost duplicating the chart, which is why I really feel like this, in my opinion, not a necessary indicator. This is stuff that you can see just by looking at the chart and marking the chart yourself. So yeah, that's a simple strategy using this indicator. You can of course do it without as well. You can, this is a short trading short example. When we're in an uptrend, you can take the long signals. Okay, just make sure that you practice on demo any strategy at first. Make sure you have your trading emotions in check, so your discipline, you know, don't let fear, anger, or greed cloud your judgment. It can cause you to make bad trading decisions. Don't revenge trade, don't FOMO, fear of missing out trade. Yeah, just have a plan and stick to it and use good money management. And you can use strategies like this on any trading instrument, so there'll always be opportunities. You don't need to force trades. As I said, 1 hour chart, we don't need to stress ourselves out, you know, trading, trying to scalp the 1 minute and 5 minute charts all day for a few pips here and there. This moves in the space of you know, less than a month, could have had a, you know, 300 plus pips. Saves us chart watching all the time, and you can use this strategy on Forex, cryptos, commodities, stocks, indices, bonds, etc. Whatever you like. Ample opportunities for trades, especially on the longer term chart time frames where you can catch big trends. Okay, appreciate you watching. If you can like and subscribe, that would be great. Hopefully I'll catch you on the next one. Take care.